G'day there. If you've ever wondered, well, what is an offset account and how does it work, then this video is for you, because in this video, I'm going to take you through some very simple examples to demonstrate what an offset account is, how it works, and more importantly, how it could potentially save you hundreds of thousands of dollars in interest repayments on your mortgage. G'day there, my name is Phil McGilvray. I am a financial coach, financial well-being consultant, and founder of the Money Boss movement, where we make practical, life-changing financial education both understandable and accessible for everyday people so that you and your family can thrive financially. And today we are looking at the wonderful world of offset accounts, and in this video, I'm going to share with you, firstly, what an offset account is and how it works. Secondly, I'm going to share with you the two different types of offset accounts. And thirdly, I am going to share with you the three really big benefits of using offset accounts. So let's look at an example of how this actually works. Now, let's say that you have the average Australian home loan, which right now, as of March 2025, is $601,000. Current interest rates are about 6%. That would mean that every year in interest on your home loan, you are paying about $36,000 to the banks for the privilege of having that home loan. Now, let's say though that you had $50,000 in cash sitting around between your transaction account, your rainy day fund, and your cash reserve account. We've got that $50,000. We sit that in an offset account instead of normal bank accounts. We sit in the offset account. What will happen is that the bank will add those two. It'll say $601,000 minus the $51,000 that I have sitting in my offset account, means that they're only considering your home loan now to be $551,000. So the $50,000 in your offset account, even though it's a separate bank account, separate to your mortgage, that money sitting in there is considered off your mortgage, and you now only have to pay interest on $551,000. So at 6%, that interest payment would be $33,060, which means that you've just saved yourself $3,000 in interest by having that money sitting in your offset account. Sounds pretty good, doesn't it? Just for simply using offset accounts. Now, let me show you the bigger picture though of this, because this is where it gets really powerful. If I have that $50,000 sitting in my offset account, let's say we have it sitting in my offset account from month one, my home loan is $601,000, my interest is the same 6% we were just talking about. By having that $50,000 sitting in my offset account, I will pay my home loan off 5 years and 9 months earlier, and more importantly, I will save myself $201,000 in interest over the life of that loan. So that's $201,000 in after-tax money that you now get to save because you've had that $50,000 sitting in your offset account during the life of your loan. Money you would have had there to pay your bills, money you would have had there as your rainy day fund, money you would have had there as your cash reserve. It has saved you $201,000 in interest. Okay, so let's have a look at the two different types of offset accounts. On the left-hand side, we've got what's called a savings offset account, which is really a no bells and whistles type of account. It's purely just a savings account in that any money sitting in there is 100% offset against your mortgage, but you don't have a debit card attached to it. You can't do direct debits out of it, and you can only do transfers between one other key account. So generally, that's your transaction account. You can only move money between those two. The everyday offset account, however, has 100% offset. You can get debit card attached to it. You can get direct debits from it. You can have transfers moving from it to other bank accounts. Basically, it has all the bells and whistles of a normal bank account. Now, it's important to understand that some banks will offer a savings offset, some banks will offer everyday offset, some banks will offer neither, and some banks will offer both. You need to know when you're applying for your home loan, well, firstly, can I get an offset account? And then secondly, which type of offset account can I get with it? And ideally, you can get both. So that's it, two types of offset accounts. Now, let's have a look at the three really big benefits. We've already seen the power of being able to save me interest, but let's have a look at the three really big benefits. Whoops, wrong way, sorry. First one is an offset account gives you a higher rate of return. Now we're going to have a look then to say a savings account. Secondly, using an offset account will save you tax. And thirdly, it's going to help you keep your home loan sacred, which is really important. And I'll explain each of these now. Okay, so firstly, let me just bring those up. What we've got here is, I'm sorry this is a bit small, I've basically just taken a snapshot from the comparison website finder. For these, if we have a look at the current interest rates on savings accounts, so if you went for a high interest savings account, not only, as you're probably aware with these high interest savings accounts, do they have lots sort of bells and whistles that you've got to sort of jump through to get the rate of interest, like you've got to have it linked to an account, you've got to put $100 in it every month or so on. There's all sorts of rules that they put around it. But you can see here the interest is somewhere between 4.5%, and if we look at the highest one here with ING, is 5.4%. These are the highest rates of interest that you can get on any of these high interest savings accounts right now. However, if we have a look at the home loan rates, these are somewhere between 5.7, 5.79, 5.8, 5.7, and these are on the low end of the spectrum. Your traditional banks, as we saw, as I said before, still have interest rates around that 6% mark. But the thing that I want you to notice here is that the rates that you are paying on your mortgage are higher than the rates you can get in interest on your savings accounts. So I'm hoping you see that. If I can save money on my mortgage, so if I can save 5.75 to 6% on my mortgage, it's better than earning somewhere between 4.5 and 5.4 on my high interest accounts. The savings overall is much better on my mortgage. So that's the first thing that we need to know. Okay, so let's now have a look at the second benefit of having an offset account, and that is having money in your offset account will save you money on tax. Now, who doesn't like saving money on tax? Using the example of a savings account again, $20,000 sitting in that savings account. Let's say the interest that I could earn is 5.5%. So I've chosen the highest interest rate available on savings accounts right now. Interest earned would be $1,100. So 5.5 times 20,000 is $1,100 per year. But unfortunately, because I've earned that interest, the taxman's going to want his piece of the pie. At 32.5% tax, that means I would have to pay $357 to the taxman, which means I only get to keep $742.50 of that interest earned. However, if we look at an offset account, the same $20,000, the interest I would save would be about 5.84. So I've chosen the lowest mortgage rate here, 5.84%. So the interest saved would be $1,168, which I'm hoping you can see, and this is what I said in point one, or benefit number one, is that I'm saving more here than I could earn in interest on a high interest account. But the big benefit here is that I don't pay any tax on this because it's money I've saved rather than money I've earned. So there's no tax. So at the end, I get to keep the whole $1,168, which I'm hoping you can see is about, what, $420 odd more than using a savings account. Okay, so that's benefit number two. It saves you money on tax. Okay, now let's finish off with the last big benefit of having offset accounts, and that is to help you keep your home loan sacred. And by this, I mean that any money that you pay off your home loan stays off your home loan. We are not to touch that money. And by having offset accounts, what it allows us to do is put money in our offset accounts for upcoming expenses. We can put money in our offset account for unexpected expenses like the dog getting sick, the car breaking down, or the fridge dying on us. We can put that into an offset account. We can put money aside for big life events like, what if we get sick? What if we get laid off? What if we need to take time off to care for a loved one? We've got money sitting in a cash reserve in an offset account for that. And lastly, we've got money set aside for big life goals in our offset account. And while they're in the offset account, they're considered by the bank as off the mortgage. So we're saving ourselves a heap of money on interest. It all sits there and we know we can touch that money. But anything over and above that, we can take and put into our mortgage, knowing that that's going to pay our mortgage down, but we are never to touch that money. My experience as a financial coach is that once we start dipping into the money that we're ahead on our mortgage, often called a redraw facility. Once we start dipping into the money we paid in extra off our home loan, we'll just keep doing it over and over again. A bit like when we open a packet of Tim Tams at home, once it's been opened, it's likely to disappear really quickly. So we don't want that to happen with extra payments off our home loan. So by having the offset account, it provides us with a buffer. It gives a purpose to all the money sitting in the offset account, and then anything extra can go onto our home loan and stay on our home loan. So I hope this has been helpful. I hope you now have a really good understanding of what an offset account is. I hope you have a really good understanding of the two types of offset accounts and the three really big benefits of having an offset account. So if this video has been helpful, please click the like button because that helps this video reach more people. And can I encourage you to subscribe, because every week I'm producing more videos with practical, life-changing financial education, because I truly believe that little habits and strategies that you implement today can literally make $1 million difference to your future. So click the like, click the subscribe, and I look forward to seeing you in the next video.